Greetings, everybody. Welcome to the Liberty Call. Today is Monday, November 13th, 2023. Hope everybody had a fantastical weekend out there. It is a beautiful day here in Colorado. The sun is out. Well, it was out. Went behind the mountains already. It's almost 4 o'clock. But yeah, beautiful day. Weather in the 60s. And, wonderful, wonderful. Anyways, hope everyone had a fantastic weekend. Like I said, I injured myself. I shot a brad nail through the tip of my finger and out through the fingernail. Very pleasant to experience. So, and then you get to yank it back through. So that was fun. So hopefully no major damage. It doesn't feel like it. Anyways. All right. Well, if it is your first time watching Liberty Call, I'm glad you are here, especially you in the black shirt. I see you right there. Could you hit the follow button, the subscribe button, all those good buttons? Give me some thumbs up and hit that notification bell because you want to know when I go live. Occasionally I do say something smart. It's not every day, maybe once a week. All right. Well, let's go ahead and get into the numbers for today and see how things turned out. The markets were not real happy here domestically most of the day. The Dow Jones was up 0.16%, 54 points, closed at 34,337. S&P 500 was down 0.08, closed at 4411. NASDAQ down 0.22, closed at 13,767. The VIX was up 4.16 today. It's currently at 1476. Canada up 0.28, Brazil down 0.13, and Mexico down a third. In Europe, Germany was up 0.73, the UK up 0.89, France up 0.6, Netherlands up 0.98, Spain up 0.96, Italy up 1.48%, Switzerland up a third, and Portugal up 0.79. Russian exchanges both in the green, the MOX up 0.19, the RTSI up 0.9. And the overnights, the Nikkei in Japan was flat, down 0.01, Australia down 0.4. In China, the Shanghai was up 0.25%, the Shenzhen component up 0.1%. China A50 down 0.48, DJ Shanghai up 0.18, Hang Seng up 1.59, and the Taiwan weighted was up 0.94%. So kind of a And because we saw on Friday, there was an article that came out, or some news that Moody's was downgrading the U.S. So, kind of convenient for them to drop that nugget on a Friday after the markets closed on a holiday weekend. So, sort of a holiday weekend, for us veterans who most of us don't give a damn about it either way. All right, let's go ahead and get over to the weekly economic update, see what it has to say. Powerful Friday rally left stocks higher last week, extending the market's early November gains. The Dow rose 0.65%. The S&P 500 was up 1.31. NASDAQ was up 2.37, and overseas was up 0.25%. All right. In a news light week, stocks added to the gains of the previous week's rally, helped by stable bond yields. Last week's advance did not go smoothly, however, as the week's accumulated gains were erased on Thursday by a combination of a 30-year Treasury bond auction that saw lower than expected investor demand, which sent bond yields sharply higher. Disconcerting remarks by Powell that disappointed investors harboring hopes for the conclusion of the Fed's rate hiking cycle. Stocks rebounded strongly on Friday as investors reconsidered Powell's comments and bond yields retreated, leaving the rally from October lows intact. Powell speaks. In last week's presentation, the gathering sponsored by the International Monetary Fund, Fed Chair Powell said that while he and other Fed officials were encouraged by the progress in bringing down inflation, he was not confident that the Fed's current restrictive monetary policy stance was sufficient to achieve the Fed's inflation rate. The Fed's target inflation rate of 2%. His comments, which followed the Fed's two successive decisions to pause on fresh interest rate increases, emphasized that there remained a long way to go to achieve their goal, and the Fed is committed to doing what's necessary to reach that target, whether that's through additional rate hikes or by keeping rates higher for longer. Economic data coming out this week. Tuesday, we have the Consumer Price Index. Wednesday, we have the Producer Price Index and retail sales. Thursday, jobless claims and industrial production. Friday, housing starts. Companies reporting earnings this week. Tuesday, we have the Home Depot. Wednesday, we have Cisco, Target, and TJX. Thursday, we have Walmart, Applied Materials, Palo Alto Networks, and NetEase. All right, so there's the weekly update. There's some other stuff in there like, what else is there here? Itemized deductions, health tips, things like that, a riddle, and some photos. So, all righty. Let's jump into the market recap. Dow rides energy stocks to end higher ahead of inflation data. All right, on Monday, the Dow Jones Industrial Average experienced a modest gain with support from energy and healthcare stocks. The energy sector benefited from a rebound in oil prices after the previous week's decline, driven by concerns about global demand, particularly from China. ExxonMobil's 1% rise contributed to the sector's positive momentum as the energy giant revealed plans to commence lithium production in 2027. Well, that's 3 years away, so I'm not sure why that helps now. Boeing surged over 4% after securing a $52 billion order from Emirates for 95 aircraft. Tesla rose more than 4% following an update to its agreement with future Cybertruck buyers, introducing restrictions on reselling within the first year of purchase. I read an article yesterday that it was they'd owe $50,000 if you sell your truck to somebody else within the first year. So I'm not sure how they can hold you to that. I mean, maybe it's in the contract to buy it, but again, I mean, it's private property. You can do whatever you want with it. Anyways, all right. Moody's credit rating agency revised the U.S. credit rating outlook from stable to negative, maintaining the the AAA long-term rating. Concerns about a potential government shutdown intensified given the approaching November 17th deadline for Congress to pass a funding bill. Yeah, we got that coming up this week? Woo-hoo. Maybe by the end of the week, the government will be shut down again. All right, we're already saving money. All right. Investors remain cautious as they awaited October's consumer inflation data scheduled for release on Tuesday. Expectations suggest a slowdown in inflation to 0.1% on a monthly basis and a 3.3% increase on an annual basis. That's still 3%. Despite this, Federal Reserve Chair Jerome Powell hinted at the possibility of further interest rate hikes, aligning with views expressed by other Fed officials. The semiconductor sector experienced a 1% decline, affecting the broader tech sector, despite NVIDIA's modest rise following the introduction of its H200 chip, set to launch in Q2 of I assume next year, 2024. While NVIDIA climbed, other chip stocks such as Marvell Technology, Lattice Semiconductor, and AMD faced losses. As the earnings season nears its end, attention is turning to big box retailers like Home Depot, Target, Walmart, and Macy's, which are set to reveal their latest quarterly results, providing insights into the upcoming holiday shopping season. All right. So, we're kind of waiting to see what the CPI says. Everyone's waiting to see what the Fed is going to do. I have my own opinions. I think they're going to keep rates. I know a lot of folks are already hoping, they're chomping at the bit, or champing. It's champing at the bit to for rates to start dropping. I guess they were hoping it was going to, start now, but that just doesn't seem realistic, especially with, inflation the way it is. I'd like to see some deflation. How about we get back to, say, 2021 levels or maybe early 2022? Because all that cumulative inflation we've had over the last 3 years, it's really added up. And it'd be great to get to zero inflation from last year to now. But, we still had all that other inflation that built up behind it. Anyways. All right, one last article here comes from our friends over at First Trust, Mr. Brian Westbury, their chief economist. It's titled, "The Election Outlook is a Tax Outlook." So let's see what he had to say. As the U.S. approaches the 2024 presidential election, the federal budget emerges as a critical concern. Moody's recent decision to downgrade the outlook for U.S. debt to negative from stable underscores the urgency of addressing the current budgetary challenges. The United States is currently running an unprecedented reckless budget, marked by an exceptionally rapid rise in the deficit, even during times of peace and economic stability. I don't know if we could really say peace, Brian, because we've been, fighting wars my entire life, and I'll be 50 next February. So, yes, there's no declared wars, but we certainly have seen a lot of conflict and military spending, especially in the last, since 9/11, which we know that was staged by the government and the Jews anyways. All right, let's go ahead and get back into it. Hope I don't get banned for that one. Where were we? The 2020 presidential race is anticipated to feature a rematch between Joe Biden and Donald Trump, with potential influence from retiring Senator Joe Manchin. Trump is considering a slight favorite, although challenges persist due to his divisive image. The outcome of the House of Representatives likely to align with the winning party to the presidency. In the Senate, the GOP holds a favorable position with 49 seats and a strategic advantage in defending seats predominantly in red states. West Virginia is going to go red. I have Really good feeling that Manchin, the only reason he held on to that seat because he was, in good graces with a lot of the conservatives there. Vulnerable Democrat seats in West Virginia, Ohio, Montana, Arizona, and Nevada increase the GOP's potential gains. The election's outcome will significantly impact the fate of the Trump tax cuts set to expire in 2025. A GOP sweep with a 30% probability could lead to a full extension of tax cuts and substantial reforms to Medicaid, accompanied by budget cuts beyond national defense. A Democrat sweep with a 20% chance may result in a substantial tax hikes on individuals and businesses. Yeah, because we love funding useless government. A mixed government representing a 50% probability is expected to bring in modest tax increases, discussions on government size reduction. Yeah, that'll never happen. And the likelihood of negative outlooks progressing to deserved downgrades in the future without significant spending cuts. The election's outcome will play a pivotal role in shaping the nation's fiscal policies and it's not a nation, Brian, it's a republic, and addressing the challenges posed by the soaring deficit. All right, so that's everything that I had to cover for today. I personally hope we don't get to an election. I hope the republic collapses between now and then. It certainly saved me a lot of money and, probably save a lot of brown and yellow people around the world who we like bombing the hell out of. So anyways, all right. Well, that's everything I had for today. If anyone needs to get in contact with me, please go to dsafinancialgroup.com. All my contact information is there. If you want to book a meeting, get your finances in order, plan for retirement if that ever happens. All right. So you can go to the website and check all that out. So hope everyone has a wonderful evening, and I shall talk to you guys next time. Adios.